For more on the big Discovery deal and more M&A opportunities, we're joined by Christopher Pultz of Kellner Capital. Christopher joins us, I believe, along with Ed Hammond, our deals reporter here. What can you tell us, Christopher, about the M&A, about first of all, in the media universe right now? Was this kind of deal expected, and do you see more consolidation coming?
Thank you for having me, and good afternoon. This is a dissolution of a merger that came together only a couple of years ago, and it shows how difficult it is to merge the content and distribution sides of the business. Both sides are very capital intensive, and AT&T, in order to roll out their 5G platform, needs a lot of cash. So this is a great way for them to monetize the Time Warner assets, probably at a loss, but a way to get some cash back to continue their rollout. So we had seen a lot of mergers over the last several years between content and distribution, and we may see some unwinding of those as we go forward.
All right, Craig Moffett and Michael Nathanson earlier told me it was a loss of about $100 billion, basically that AT&T blew on the media bet gone wrong. I guess it's better to cut your losses than to throw good money after bad. Where do you see the most M&A activity, Christopher, in 2021, and how heavy is this year expected to be?
So we see three areas where we could see continued activity, and we're at record activity right now. We had our third consecutive quarter of over $1 billion in transactions, but we think one in healthcare. There's always the changing laws, so there's going to be continued consolidation there. We're going to see filling in of pipelines. We saw that with the Alexion and AstraZeneca transaction, a $40 billion transaction that was announced at the end of last year. That should complete sometime in the third quarter. But that was a pipeline deal that they're trying to fill holes in. Technology, of course, there's always cost cutting going on there as they try to expand their product lines. The big deals that we're looking at are Nuance and Microsoft, and Slack with Salesforce.com. Those are two big mergers that are in the process right now. And then in the banking sector, we've seen a flurry of deals over the last several months with the new administration coming in. With the prior administration's relaxation of regulatory rules, there's a fear now, I think, that those rules may return, which make bank mergers a lot harder. So it looks like they're trying to get those mergers in before the new administration gets its footing here.
What do valuations look like right now, Christopher? Because nobody wants to end up like Randall Stephenson and, blow a cool $100 billion only to realize it 3 years later, right?
Right. Well, we've been in a long bull market here for a while, right? So valuations are always stretched at this point. But we're still seeing solid strategic transactions. There's going to be the big scratcher headers like we saw with the Time Warner and AT&T a number of years ago that are going to be unwound. But the vast majority of the deals that are being done are solid strategic transactions.
What kind of money is sloshing around out there? Because we've seen, outside of the strategic buyers, so much cash in private equity, and that's a story that hasn't changed over the past years. $1.5, $2.5 trillion out there that needs to come in. Doesn't that blow up prices?
Absolutely. I mean, that's $2 to $3 trillion in unlevered capital, and we all know that private equity likes to put a lot of debt on the companies that they're buying. So there's going to be constant battles for all these assets that are out there, not only from the strategic side, but from the private equity side, as you mentioned, and that'll stretch valuations even further.
The rising rate environment, not historically good for the environment, but it does look like we're still going to see new records in M&A notwithstanding, right?
Well, if you look back at the two tightening cycles over the past 2 decades, because there hasn't been one in a while, in both of those rising interest rate environments, M&A activity actually increased.
Wow.
So we would expect that to continue as well going forward.
How important is the vaccine rollout and the reopening? I mean, are you still watching that, or are you just, and by you, I don't mean you personally, but the industry just kind of betting it's in the bag?
Well, I think for our business, it's not really that important. Obviously, it's important that everybody gets back to work, but we're just focused on the activity that's going on, and with the rollout and the reopening of business and everybody getting back to work, that should only be good for businesses going forward, generating cash flows, and then in turn, more deals happening for us.
So you'll continue to be busy. I mean, Mike Mayo came out today and said 200,000 jobs in the finance industry will be lost over the next decade as things kind of slow down and processes are automated, but not at Kellner.
Well, I think that people realize that they can work from home, so there's obviously going to be some efficiencies that are going to be wrung out from a lot of the large banks. But we're happy with our employees and where we are right now, and we have no future layoffs planned.